How did Black Friday 1929 unfold? Have you ever wondered how a single day in history could change the course of economies worldwide? Let's take a closer look at Black Friday in the context of the stock market crash of 1929. This event is often confused with the shopping day we know today, but it was much more serious. The stock market crash began on Black Thursday, October 24, and reached its peak on Black Tuesday, October 29. This crash marked the start of the Great Depression, a time of economic hardship that affected many countries, including those in Europe. To understand how this all unfolded, we need to look back at the Roaring Twenties. This was a time of great prosperity in the United States. People were investing heavily in the stock market, often buying stocks on margin. This means they borrowed money to invest, hoping to profit from rising stock prices. However, this was a risky practice that set the stage for disaster. By mid-1929, signs of trouble began to appear. Industries were producing more goods than consumers could buy, leading to falling prices. On September 3, 1929, the stock market hit its peak, but it started to decline shortly after. On Black Thursday, stock prices dropped dramatically, losing about 11% of their value at the opening bell. Despite efforts by bankers to stabilize the market, panic selling took over. The market saw a slight rebound in the following days, but the situation worsened. On Black Monday, October 28, and then again on Black Tuesday, October 29, the market crashed even more severely. By the end of October, billions of dollars had been lost, and many investors were left bankrupt. The impact of this crash was not limited to the United States. Europe felt the effects almost immediately. The economies of European nations were still recovering from World War I, and the collapse of the American stock market led to a worldwide economic downturn. International trade and investment plummeted, causing widespread unemployment and social unrest across Europe. This economic crisis contributed to the rise of extremist political movements in several countries. Many people were desperate for solutions, and this environment created fertile ground for radical ideologies. The Great Depression also led to significant economic reforms, including the abandonment of the gold standard in many nations. In summary, while the term Black Friday is often used in a different context today, the events surrounding the stock market crash of 1929 were monumental. Understanding how these events unfolded helps us grasp the economic and social challenges that shaped Europe during the interwar period. The repercussions of this crash were felt for years, influencing political landscapes and economic policies across the continent.